distressed properties. So we're talking about foreclosures, bankruptcies, probates, and short sales to a lesser degree now.
Right.
So,
And
Darren, you want to start with that number two?
sure. So our reason for doing this is, there's always some level of distressed properties out there. Like every other part of real estate, there are predictions on what may come in the future. There are people that believe foreclosures are coming post pandemic, and there are those that don't. There's always probate. There's always bankruptcy, uh, and then short sales is kind of specific to a heavily declining market. So we just want to inform you. I think there's also a lot of misinformation out there about these tools. So that's the purpose of this. And everybody's out there seeking value in some way, often. Maybe not everybody, but many. I know we do. So are they valued and discounted? Start there. Sometimes. Often they're not, and if they are, they're valued and discounted to investor buyers that will take them without inspections, that will pay cash. Sometimes those are limitations tied to specific purchases, and those are the ones that are discounted because both foreclosures, bankruptcy, all of these categories of sales can sell at retail values and often do. So there's an assumption that you're getting a deal when you're pursuing these. So there are limitations getting in the door, and then often they're not deals. So number three, limitations on who can purchase. For an example, foreclosures, a true foreclosure is a cash purchase, period. So unless you have cash, and there are other issues tied to it as well, you're not in that market. You're not truly buying a foreclosure. Other options, often they end up being larger down payments. Probate requires a larger down payment. Bankruptcy doesn't require it, but often is seeking it. And many of these have no inspections and sometimes even no ability to see the property at all before you complete the purchase. Then you get to go with a locksmith and unlock the door and see what's inside. A lot of these are not for people who are not very comfortable with the process of buying and selling. Yeah, exactly.
And I think also, too, you've got to have an agent that understands the process and can educate you to measure that risk and the chances you take.
Reduces your risk dramatically because that agent then fills the role of the experienced purchaser who can communicate the situation. Definitely the case, Joe. And we've been on the courthouse steps bidding on properties in the past. At foreclosures, we've done bankruptcies, probates, and short sales, plenty of them. So, and a lot of agents simply don't have that experience or knowledge in these categories. So if you're gonna try to pursue them as a purchaser, or even if you need to try to navigate them, still having it as a forced sale, it's good to have an experienced agent. What is the reality of purchasing these properties in today's market? We kind of covered that a little bit. Some of the fundamentals, things to understand about each. So then we just break down each one a little bit. We start with short sales, which are, I've done plenty of them in the past. It's been a while. It's probably been 10 years since I've done a short sale. If they ever come up again with any regularity, I'm sure they will not have changed too much. But you typically will see a short sale, first of all, the definition, is gets the name from shorting the bank. The thing that you always laugh at if you're in this industry is that it's anything but short on time. It's very long to complete them. So shorting the bank, but not short to complete the sale. It's one of the more complicated sales going on in the background. And as long as you know what you're getting into, again, that's fine. But you do need to know, in this case, specifically of all of them, it's the most likely not to be completed. Meaning that the bank is getting shorted, so they go out and get an offer, get an acceptance between seller and buyer, But then the whole package goes to the bank, and the bank has to approve it. Back in, at post crash, there were banks that got it down to a couple weeks. Not a lot of them, but it was more like 3 months to, and at times a year to get a response from the bank.
Wow.
Yeah, they were painful. Some of them were quite painful. And one of the things is, it's not only, the bank looks at two basic things when you're dealing with a short sale. The number one is they're identifying if the seller has a true hardship, because they don't accept a short sale just because they're saying, well, this is the best option for us to sell this property. A short sale always has to have a story behind it, or something that happened to the person that's kind of out of their control, and it can be presented in a way that just has to be consistent with some of the supporting documentation. And then number two, they're not going to sell way below market value either. They go out and do an appraisal. And sometimes sometimes the property can look a little distressed intentionally, and that helps get a reduced sale price. But they're not dummies. It's going to be, again, within a certain range. There are many here now. I would say the next wave comes when there's a decline in the market. At some point there'll be a decline, and that's when you'll see them again. So,
Got it.
all right, foreclosures. The biggest myth around foreclosures is that people think something in what's called the pre-foreclosure process is for sale, and those are the opportunities to purchase something. They're not. They're the opportunities to approach people. A property is considered officially in pre-foreclosure when an owner misses 3 payments. Then the bank can file what they call an NOD, a notice of default. And when that notice of default is filed, that's public record. And there are people, specifically investors and aggressive agents, that just sit there and monitor this activity. That's all they do. If you file an NOD gets filed on you, I'm guessing, will receive somewhere between 50 to 100 pieces of mail within a week, at least. Not to mention people knocking on your door trying to convince you to sell the property because they know it's distressed. But officially nothing happens. The property is not for sale. And unless there's a voluntary move forward to sell, then nothing happens. Some sites, and I think it's a little less now, but even some of the bigger sites used to post on their sites pre-foreclosure properties as if it looked like it was for sale. And it's so misleading, so deceptive. I believe most of them have stopped doing it now. The next issue in that process is the NOT, Notice of Trustee Sale. That's officially when they're scheduling to sell the property. These notices are often delayed. You have to monitor them in detail, confirm that they're still happening up till the day before. At any point in time during this process, an owner can catch up or renegotiate something with the lien holder, with the bank, and then it goes away, So that's always a possibility. Or maybe they're in the middle of a potential negotiation and then they just delay it. Monitoring up until the day before the sale is always important if you're pursuing that. But then in the end, if it's going to be sold, it's going to be sold on the courthouse steps. And to show it's literally done, there haven't been any during the pandemic. So I don't know if anything will change post-pandemic. Many things are. This is the most ridiculous process. You show up, the courthouse on the steps, people are standing out there with piles of cashier's checks, because you have to show that you have the full amount that you can hand them on site in that moment. It's crazy. I've done it successfully. And many times unsuccessfully. And just to understand, they established the price point as far as what's owed. from the lien holder's perspective, their goal is to get paid. So whatever remaining amount is on the loan, plus whatever late payments there are, that's typically where they establish the price. That doesn't mean what it will sell for. The ones that are way below market often end up going up at auction tremendously on the site. That's where you find a lot of people. They're bidding. Sometimes another reason to delay a sale is if people actually have equity. Not only do investors who want to purchase these homes approach the owners, so do real estate agents. They see the equity. They say, hey, you should list your house for sale. Don't let it go to foreclosure. And sometimes if they call the bank as the sale approaches, they say, wait, we're in escrow on a sale already. Please postpone the sale. And they will. They'll let the traditional sale be completed. So it's a select few that end up even for sale on the courthouse steps that require cash that have value. There are some, for sure. There are people who make a living this way. I don't think there are a lot of them that make a living this way. So that's
right. This has all gotten tougher.
It's all gotten
in terms
tougher.
of an opportunity for an agent.
Competition itself has made it tougher, right? I mean, whenever the longer the up trend in real estate, the longer that cycle is, the more people are piling in to try to get a piece of the pie, and the pieces of the pie get smaller. And then if there's a downturn, some try to hang in, but then eventually more of them will fade away, and then the cycle starts again. So, all right. So bankruptcies, there are two types of bankruptcy. There's reorganization, bankruptcy sales, and then there's Chapter 7, which is called a liquidation sale. The reorganization, we've sold properties where people are in reorganization. They're making, they craft an agreement with the court to make payments to repay their debt on a fixed schedule, and then they just choose to sell their house. If you're selling in a reorganization, there is an additional step, and all that is that you can list it traditionally. You just have to go back to the court, and the court does. It's not an arduous process. They just do it. Say, okay, yeah, this makes sense, and then we're going to take an X amount of this money and we're going to apply it to the debt you owe. So that's a sale and reorganization. That's a voluntary sale. Chapter 7, when you file a Chapter 7 bankruptcy, you release your rights of ownership of the asset to the trustee. And we have plenty of experience in this. The first thing the trustee does is determine value on the property to see if there is enough equity and if it makes sense, they liquidate the asset to help sell the estate and pay the creditors. When you walk away from Chapter 7, if it's successful, then you owe nothing. If you owed $500,000 and there's $100,000 of equity in your house, maybe all that makes sense. No one wants to lose their house. For many, it's the largest asset they have. But if selling your house gives creditors $100,000 and you don't owe anything more, it could make sense. And if you have a good attorney, they can help understand that, and sometimes even they should get a value in advance to let you know if it's potential that will happen to you during the process.
Got it.
Chapter 7 debtors, sometimes we've been through the process where we've provided a value and the trustee decides they're going to sell the house, and then they're surprised because they didn't get good advice, or they tried to force the value down so that it wouldn't be sold, and then they try to convert. They try to go back to a reorganization. It's up to the court. Typically the response is that if you're doing this simply because your house is going to be sold, that you shouldn't be able to pull out of it for that simple reason. But it could happen. And they seek enough equity on the table in paying creditors in full. Unlike a short sale, most lien holders in a bankruptcy won't accept a short on their payoff. And it's not uncommon that in a Chapter 7 or in any form of bankruptcy that they're late on their payments for the house. The one exception that we've seen pretty consistently is the IRS. The IRS is much more inclined to accept a short pay, and the trustee will attempt to negotiate that in advance. But lien holders on the property typically do not. Now, a few of the procedural things, item E, all bankruptcy, Chapter 7 bankruptcy sales will require court approval, and there is an overbid process. So a court date is requested only after there is an accepted offer between the buyer and the trustee, who is the one who signs all the paperwork. The debtor, the previous owner of record, doesn't have to sign anything because they've already turned over all those rights to the court, and the trustee is signed to it. Once contingencies are removed, you get a court date assigned, and then there's an overbid process. The property is remarketed for that overbid, and it goes to court. Maybe it gets overbid, and maybe it doesn't. They approve the sale, and then you can close within 2 weeks. To bid in court, again, these are people who are often a little more experienced. You have to show up with a cashier's check for 3% of the purchase price. There is no fixed amount for overbid in bankruptcy. Often it's, a couple $1,000s over the accepted price. Sometimes there's an incentive to be the original buyer. Sometimes you want to end up being the overbidder in court. Unlike probate, there is a 5% premium in court. Maybe there's more of a motivation to be the original buyer, so you don't have to pay a minimum of 5% over the accepted price. So that's it. No other requirements. They're just looking, anytime you're engaged in a court-driven process, there's obviously a lot of high-paid people and government involved that's getting paid. The goal is to get the most likely buyer. We always say that, but it's that they will take some discount to get a buyer that's likely to close compared to someone that's questionable. Then probate, the last one. It's similar to Chapter 7 in the flow and the court date, unless there's an approved executor in advance. So if somebody has a will, or it's or a trust, and there's somebody assigned to be the executor, the court does still have to approve that. So that's step one. You go to the court and say, hey, please approve this executor. If they do so with no conditions, then you can proceed and sell it on market, and not have to go back to court. The proceeds stay in the court until the probate is concluded. They don't distribute them to the heirs right away, but the sale can be completed as a traditional sale at that point. There can be either no approved executor, or the court can say we still want it to come back to court to approve the sale, in which case it follows the procedure similar to the Chapter 7, where you get an approved offer, remove all contingencies, schedule a court date. The probate courts are much more backed up than the bankruptcy courts. There's a much larger delay. When I last,
So it's like a 1 year plus.
it's not a short
process?
sale level, no, and certainly I think, I'm guessing, and I'm not sure, but I'm guessing the courts have been closed because of COVID for probate as well. I'm pretty sure. So there's going to be cases backed up. There were already cases backed up because they reduced the amount of courts. They actually shrunk the court system to process the probates. I'm assuming in an attempt to save money on the government side, but it made it more inefficient. So what I was hearing pre-COVID was 6 months maybe to get a court date. In bankruptcy, you get a court date depending on the court. Whether it's LA, Riverside, San Bernardino, depending on the area, typically within 30 days. So it's much faster than a probate sale. Probate also does have two main conditions. They do have the minimum 10% down for any purchaser, and then they have the minimum first overbid amount being 5% above the accepted offer.
Got it.
So that's it. That's the incredibly exciting distressed property world. I get into it. I like the details, but it's a bit dry.
Yeah.
I get it.
Well, certainly on our team, you're a detailed guy.
Yeah.
I have other talents.